Hi, Vidya. Let me know when are we ready to start. Someone from JMC, if you can let me know whether we can start or not.
Yes, sir. You can start.
You can start, no? Right.
Yeah.
Okay, give me a second. Can someone confirm whether I'm audible or not, as well as whether my screen is visible or not?
Yes, both visible and audible.
Fine. Okay. Right. Before we start this model paper, I would like to, if you can't hear me properly, you can unmute and tell me. Otherwise, I will continue and you might not be able to hear. Right. So before we start this model paper discussion, I would like to make sure few things. One is, during this 2 hours time period, you must interact with me properly, because this is a model paper discussion. So throughout this, you have a lot of questions. So you have to interact with me. Second thing is, don't take much time for you to respond, because if it is the case, within 2 hours time period, we might not be able to continue this properly, right? So this is for your benefit. Therefore, utilize this 2 hours time period to get the maximum benefit. Fine. I think Jeevandasa is the lecturer for this, if I'm not mistaken, for JMC headquarters. For the branches, I don't know. If someone is outside JMC network and join for this vLearning platform, you may have your own lecturers. Altogether, even you have reached to whoever lecturer, as well as even you have done your self-studies, doesn't matter, same thing we should learn. You should have been learned, nothing new, right? Therefore, if you see any difference in learning outcomes, the same thing you can highlight in this case and clarify it. Otherwise, you will learn something, but there can be discrepancies, right? Fine, done. Okay, so with that, without giving any, introduction to the syllabus and introducing myself, we will jump into the paper to get the maximum outcome, right? Fine, done. So I told you, during this 2 hours period, I will interact with you. Definitely, you must answer my questions, right? At the end of the paper, I'll tell you how I'm going to give the answers to this model paper questions, not now. Okay, fine. So with that, for your benefit, let me open that as well. I have summarized all these topics into one platform, one diagram in Excel, because I prefer to have all these things in Excel. It is easy for me. Let me open that also. Give me a second. Yeah. If you look at this Excel, not this, Yeah, if you look at this Excel, all the auditing standard which are applicable for your level and other topics, I have summarized into simple diagrams, right? Business processes, and if you take risk management and key topics such as internal controls, so everything you can see in this Excel. So then and there, when it's required, I will refer to this Excel as well. Don't worry, even though you don't have this Excel with you, the relevant areas I will cover with this Excel, right? Fine. This is for your benefit. Done. So if I move to first question, you must answer this together with me, right? Together with me means you have to interact with me. So tell me what is mean by audit risk? If someone can unmute and answer, great. Come on, I told you, take the maximum outcome of this session. No one can answer. So shall we stop this then? Come on. I thought that you can speak well. It seems that it is not the case. So around we have 22. None of you can speak. So then I have to name you all. Otherwise, I don't know whether you are sleeping or not. At least you have to talk with me. Answers can be correct, wrong, that doesn't matter. Your intention is to learn. So I can explain what is audit risk, everything. That's why I'm lecturing here. But I prefer if you can answer this, because you have 1 week or 2 weeks to the exam maximum. Come on, no one can answer. Kaushalya, so I have the names, I can speak to you directly. Sahana, when I was lecturing to you guys somewhere in 2020, now I'm not lecturing for AAT. The students were pretty much good in speaking and interacting. Come on, can someone tell me what is audit risk? At least I don't know, I can see this list of people. I don't know whether you can speak or not. So Mosha, are you there first of all?
Sir.
Yes, good.
Okay, sir. I'll tell the answer.
Can you speak a little louder?
Yes, sir. Can you hear me?
Yes, can.
The audit risk is an auditor express an inappropriate audit opinion on the financial statements which has the material misstatements.
Very good. So audit risk means auditor express inappropriate audit opinion. So look at this Excel, right? In this Excel, you can see audit, there's a tab for audit risk, right? Let me show you. Audit risk. So in this case, you can see audit risk means risk that auditor express inappropriate audit opinion when financial statements are materially misstated, right? Then I will give you an assignment, right? So there are 4 cases, right? 4 cases. By looking at these 4 cases, tell me under which scenario we have exposed or we have an audit risk. Simple question. Let me explain the question. There are 4 scenarios, 1, 2, 3, 4. Simple. The opinion that auditor has given is, in first scenario, financial statements are true and fair view. That's the ultimate objective of auditing. So auditor is saying, look here, shareholder, your financial statements are true and fair view. Satyaha sadharana way. True and fair view. At the same time, right? ඒ වෙලාවේ material misstatements are there. Yes, material misstatements are there. Material misstatement තියෙන ගමන්ම auditor කියනවා, look here shareholder, your financial statements are true and fair view. Do we have audit risk here? That's the question. Material misstatements තියෙන වෙලාවේ auditor කියනවා financial statements are true and fair view. Do you have any audit risk here? Question. Second scenario, auditor is saying, look here shareholder, your financial statements are not true and fair view. FS means financial statements. Financial statements are not true and fair view. Satyaha sadharana noe. ඇයි එහෙම කියන්නේ? Because material misstatements are there. Material misstatements තියෙන වෙලාව auditor කියනවා, look here, your financial statements are not true and fair view. Do we have audit risk here? You have to assess. Third point. Financial statements are true and fair view. That's the third opinion. How they can auditor? Look here shareholder, your financial statements are true and fair view. Satyaha sadharana විදිහට තියෙනවා. ඒ වෙලාවේ material misstatements? No material misstatements. Material misstatements නැල්ලු. Dangerous. Material mistake, not dangerous. That's correct, right? No material misstatements. At the same time, you are saying financial statements are true and fair view. මේ වෙලාවේ අපිට audit risk එකක් තියෙනවා. That's my next question. Same question I'm repeating, but under different scenarios. Fourth scenario, auditor කියනවා, look here shareholder, your financial statements are not true and fair view. Satyaha sadharana noe. Financial statements are not true and fair view. At that time, at the same point, material misstatements නෑ. අන්න material misstatement නැති වෙලාවේ auditor කියනවා, look here shareholder, your financial statements are not true and fair view. Under what situation do we have audit risk? ඔන්න scenario 4. Now I will ask questions from you. Right? I will name you guys. Right? ප්‍රශ්න තේරුම් නැත්නම් තේරුම් නැහැ කියනවා. Right? බය වෙන්න එපා. I can repeat, I can explain if you want many times, but we have limited time period. That also we have to take into account. Okay. Dilukshi, do we have audit risk in first, second, third, fourth scenarios, or under which scenario you have audit risk?
Sir, in the first one?
Only in first one. Second, third, fourth, no audit risk.
No.
Okay. Then I'm randomly selecting students, right? Samhan?
Second one.
First and?
Second and fourth.
Second and fourth. You have audit risk. Fine, good. Let's see others. Let's ask from Shakar. Hope you're there. Come on. meaning Shakar is not up to the standard. You have not yet started studies. There's a risk of passing this exam if you can't unmute and answer. That's my assessment, right? If I am correct, you have to put some more effort to pass this exam. Sorry to say that, right? Anyway, Vihansa?
So second and fourth.
Second and fourth. Okay, I'll stop asking question at that point. I can assess you guys right now. Anyway, don't be upset if you have given wrong answers to me, or don't be upset if you have wrong answer in your mind. But I would like to pay your attention again to the definition. Look at this. Auditor express inappropriate audit opinion when financial statements are materially misstated. There are two conditions should be satisfied to have audit risk. Simple, very simple. Two conditions. What is the first condition? Opinion should be inappropriate. That's the first condition. Second condition is financial statement should be materially misstated. Now you can start with the second parameter. Under what circumstances financial statements are materially misstated? Audit risk either 1 or 2. Second condition when financial statements are materially misstated. So in my four scenarios, under 2 circumstances, financial statements are materially misstated. Yes. In these 2 cases, audit risk the financial statements materially misstated. If financial statements are not materially misstated, no risk to auditors. No risk to auditors. Auditor risk material misstatements. Material misstatements. Auditor kiwwat inappropriate audit opinion. Now we'll go and see under what circumstances we have inappropriate audit opinion. What is the opinion in first case? Financial statements are true and fair view. Satya ha sadharana way. Financial statements are true and fair view. Material misstatements when financial statements are materially misstated. Now I have another question to explain this. Tell me what is mean by material misstatement. Forgot about materiality. What do you mean by misstatements? Misstatements can be
Frauds and errors.
very good. Frauds and errors. When you have frauds and errors, financial statements are true and fair view. Under risky ka. Appear honda lamekuta nigga වැරදි ළමයෙකුට හොඳයි කියනවා වගේනේ. එතකොට වල රිස්ක් එකක් තියෙනවා. ඔයා වැරදි. Financial statements are not true and sorry with fraud and errors. ඒ වෙලාවේ කියන true and fair view. අන්න ඒ වෙලාවේ ඔයාලට audit risk එකක් තියෙනවා. ඒ වෙලාවේ audit risk එකක් තියෙනවා. But look at this. No financial statements are with frauds and errors. ඒ වෙලාවේ කියන financial statements are not true and fair view. Your opinion is appropriate. When you have material misstatement, yes, you have to tell shareholders your financial statements are not true and fair view. This is adverse opinion, right? Adverse opinion, but qualified opinion also can be given. But anyway, you are not saying financial statements are true and fair view. But the financial statements are not true and fair view or subject to except matter. You know, audit report we can qualify either qualified opinion or adverse opinion. Here I have given adverse opinion for you to understand this properly. But here you don't have risk. Material misstatements. Financial statements are not true and fair view. Audit risk in first scenario, right? Not true and fair view risk. Understand the definition properly. Right? Audit express inappropriate audit opinion when financial statements are materially misstated. Done. හැබැයි අඳුර ගන්න ඕනේ කාරණා දෙකයි. material misstatements තියෙන්න ඕනේ. ඒ වෙලාවේ inappropriate වෙන්න ඕනේ. එහෙනම් in short you language මෙන්න මේ වෙලාවේ audit risk එකක් තියෙනවා. මොකද්ද? audit risk එකක් තියෙන වෙලාව හැම වෙලාවෙම audit දීලා තියෙන මොන opinion නැද්ද? true and fair view opinion එක. ඇයි ඒක inappropriate වෙන්නේ? ඔයා කියන true and fair view කියලා. ඇයි ඒක inappropriate වෙන්නේ? ඒ වෙලාවේ material misstatements තියෙන නිසා. That's all. So that's the answer to first question, right? So if you have any question, you can unmute and talk to me. If you are sending chat, I might not be able to open this every time and go through chats. I believe if you can speak properly, right? So speak to me. Chat box I might not be able to refer because this is 2 hours game, right? You have to be firm within this 2 hours time period. Second, briefly explain 3 components of audit risk. Who can tell me, volunteer, 3 components of audit risk? Unmute and tell me. I don't ask you to explain. I'll explain, don't worry. No volunteer. Then I have to name. Dilukshi. Dilukshi Kopal. She's sleeping. Okay, sweet dreams. Kamil. Skovishka. Musha. Come on. Still you don't know 3 components of audit risk.
So shall I?
Yes, go ahead.
Inherent risk, detection risk, and control risk.
Good. So I can see at least one student has good knowledge. So briefly explain 3 components of audit risk. I think all of you have this note, right? So this is the 3 components of audit risk. The audit risk first of all, inappropriate audit opinion එකක් වෙන්නේ because of risk of having material misstatements, right? Material misstatement තිබීමේ risk එක හින්දා ඔයාට එනවා මොකද්ද? audit risk එක. Risk of having material misstatements. Number 1. Second one, detection risk. Let me explain risk of material misstatement first before I move into detection risk. හොඳට අහගන්න මේක පැය දෙකයිනේ මට ඔක්කොම මුලින් ඉඳන් theory වගේ කියලා දෙන්න බෑ because I know you should have proper background knowledge and the learnings. මේක කියපු ගමන් ඔළුවට යන්න ඕනේ වැඩේ, right? Risk of material misstatements කියන්නේ risk of having fraud and errors in your language, right? Risk of having fraud and errors. A risk of fraud and errors when organization එකක? Who can answer that? මේක තමයි practicality of this subject. Why do we have risk of material misstatement? What is the root cause to have risk of material misstatement? Fraud and errors තියෙන root cause එක මොකක්ද? Who can answer that question? Sorry?
Failure of internal control.
Very good, right? Because lack of internal controls නැති හින්දා තමයි organization එකක risk of material misstatements තියෙන්නේ. Simple answer is that. Why? In the absence of proper internal controls, you are exposed to risk of material misstatements. එහෙනම් අපි දන්නවා audit risk එක කෑල්ලක් තමයි material misstatements. material misstatement තියෙනවා. එහෙනම් material misstatements තියෙන්නේ because lack of having internal controls. You can take your notes with this. ඒක අපි කෑලි දෙකකට කඩනවා. එකක් තමයි inherent risk and the control risk. Inherent risk means, right, risk of material misstatements are having two components. One is inherent risk and control risk. Inherent risk means risk of not having internal controls. Internal controls නැති විට in singular. Internal controls නැති විට, internal controls නැතයි උපකල්පනය කළ විට. If you don't have internal controls, right, the risk you have in your organization. Simple example. No bank recs, no three-way match, no stock verifications. Bank reconciliation kiyanne, three-way match and stock verification, all these things are what? Internal controls. These are internal controls, right? If you don't have these controls, you are exposed to risk. Bank reconciliation you have a risk. Stock verification you have a risk. People can steal your inventory. There can be physical stock to system stock mismatches. A lot of risk you will have. You'll have a lot of risk here, right? If you don't have internal controls. And a risk, inherent risk. Inherent risk means embedded. You can't avoid it. Internal controls, definitely you are exposed to risk. A risk, inherent risk. Control risk. Control risk means controls are there. But the problem is what? That particular control will not prevent, detect, correct weaknesses or control failures on time. Particular control will not prevent, detect, correct material misstatements on time. Example, you prepare bank recs. Here, bank reconciliations are prepared, but no one is reviewing. Control is there, right? Because bank reconciliations you prepare. Control is there, but the problem is what? No one is reviewing control. Simple example. Now let's say in front of JMC, security uncle is there to prevent unauthorized access. Security uncle meaning control is there. Security uncle control is not effective. Control risk. Controls are there but not effective. CCTV cameras high karla. Physical controls are there. Control is there but not work properly. Control risk. Risk of material misstatements. Fraud and errors when controls inherent risk. Controls control the existing controls are not working effectively. And control risk that we identify as what? Control risk. Control risk. Control are there but not work effective. Right? Fine. So that is that. Two components. IR means inherent risk, CR means control risk. So this is because of lack of internal controls. Third risk is what? Detection risk. What do you mean by detection risk? This is something auditor's responsibility. Sometimes auditors fail to detect material misstatement due to inefficient audit procedures. Auditors audit procedures last year audit file working paper you fill this year. Audit procedures are not effective. Stock count sample stock account, but you have not assessed the risk. One of the high value items, one of the slow moving items, one of the high volume items, high risk items. Without assessing that risk, what you have done? You have done stock counts for the sake of doing it. Audit procedures are not effective. Then material misstatement can be there, but you will not detect. That's a risk. And auditor control. So this particular risk is within the control of auditor. Remember, right? Remember that. Detection risk is within the control of auditor. I'll tell you why it is important, right? These two risks are beyond the control of auditor, because internal control, who is responsible for internal control? Management. Management, they are responsible for internal controls, right? Management, they are responsible, not auditor. The management responsible, how auditor can control? Basically, inherent risk and control risk, you can't control. Auditor, you can't control. Management can control. Remember that. There are three components: inherent risk, control risk, and the detection risk. Three components are there in audit risk. Menna a three component my equation inherent risk into control risk into detection risk. Api make it again audit risk equation. This is not there in the question, but let me explain this. This is important. Sometimes examiner can ask, explain audit risk equation, or explain how do we reduce audit risk. What are questions exam again, right? How do we reduce audit risk? First of all, you should be able to explain this audit risk equation. Audit risk equal inherent risk into control risk into detection risk. You can see that in my screen, right? Now audit risk, let's assume this red color, two arrows, meaning inherent risk and control risk both are at high level, increasing. Increasing. Why I'm taking these two together? Because this is almost relating to, or not almost, fully related to internal controls, right? When inherent risk and control risk at high level, this is an equation. No? In equation, one side is increasing, definitely other side also increasing. When inherent risk and control risk increase, audit risk also increase. But auditor's duty is what? To reduce audit risk. Auditor may audit risk auditor audit risk you are responsible to reduce audit risk. You should take actions to reduce audit risk. Audit risk reduce current action make adu karanna me equation me pet adu karanna ඕනේ. ගනිතය මෙහෙන් දෙකක් වැඩි වුණා. එතකොට audit risk එකත් වැඩි වුණා. දැන් උඩට කලබල වෙලා no I need to reduce audit risk. එහෙනම් අනිත් පැත්තෙන් එකක් අඩු කරන්න ඕනේ. Either inherent risk or control risk or detection risk. Unfortunately, inherent risk and control risk you can't reduce. Why? It is beyond the control of auditor. Hey, it is something related to internal control for which management is responsible, not auditor. Therefore, only element that you can play is what? Detection risk. Detection risk, right? To reduce audit risk, you have to reduce detection risk. That is the logic behind this audit risk equation. How do you explain audit risk equation? Audit risk is the multiplication of inherent risk, control risk into detection risk. When inherent risk and control risk is at high level, audit risk also at high level. But auditor's purpose is to reduce audit risk. To reduce audit risk, you can reduce only what? Detection risk. Other two you can't reduce because those two are beyond the control of auditor. Then the question is, how do we reduce detection risk? That is your next question that examiner can ask possibly, right? How do we reduce detection risk? Here, ways of reducing audit risk. The ways of reducing detection risk also, because only way to reduce audit risk is reducing detection risk. In an examiner, what? How do we reduce audit risk? How do you reduce detection risk? Both are same, because only way to reduce audit risk reducing detection risk. Anna uttara pahak tiyena. Plan the audit properly. Audit එක හරියට plan කරන්න. You have to plan the audit properly. Second, assign more experienced personnel. Then audit risk එක වැඩි. වැඩි නන්නේ අර කබ්බෝ පොඩි ළමයි audit එකට දාලා හරියන්නේ නැහැ. Assign more experienced personnel to the audit. Apply professional skepticism. Be alert, questioning mindset. That is mean by professional skepticism. The question in mind use alert in why? Because audit risk is high. You need to reduce audit risk. To reduce audit risk, you have to use professional skepticism. Be alert, use question mindset. Increase supervision. Supervision you have to increase the supervision. You have to increase the supervision. Right? Then sell audit risk audit supervisor, audit manager make a supervise properly. Then increase the sample size. Sample size got ready karannon. Hey, product ball audit risk sample ready karannon. This is the way of reducing audit risk as well as this is the way of reducing detection risk. Onna lamai audit risk part me right? I have covered that. Fine. Go to next question. Question number 2. Right? Quickly I'll move because we have very limited time. Question number 2. That is from which always my advice, read the requirement first. When you read the requirement, examiner's requirement only, you can understand the relevant topic and you can understand the real examiner's requirement. Explain 2 reasons why professional accountant behave in ethical manner when carrying out professional work. If I give you a hint, this is from Code of Ethics chapter, right? Code of Ethics chapter. Now looking at this question, tell me why professional accountant should behave ethical manner. In short, why professional accountant should follow Code of Ethics? Come on, tell me. Volunteer. Come on. Code of Ethics. Ne, volunteers ne. Tabin? Tibin. I don't know how to pronounce, but anyway. Vihangi? Vihangi is not there? Come on, we don't have time. Okay, fine. Remember, this question is, because I'm not following chasing behind you, because this is something you need to think and write. Explain 2 reasons why professional accountant behave in ethical manner in carrying out their professional work. Because, meaning, when you are doing an audit, why do we need to follow Code of Ethics? Code of Ethics, first of all, you should understand what is Code of Ethics. Now I'm going to quickly summarize Code of Ethics. Code of Ethics chapter is having 3 key elements. 3 key elements. This is overall high level Code of Ethics chapter. Those who are not presented to that, you can listen to me now properly. One is fundamental ethical principle. Second element is threat. Third one, safeguard. Code of Ethics says you need to comply with 5 fundamental ethical principles. Fundamental ethical principle පහකට අපි comply වෙන්න ඕනේ. මොනවද fundamental ethical principles පහ? Number 1, integrity. You have to be honest. අවංක වෙන්නලු. Straightforward. හරි කෙලින් මිනිස්සෙක් වගේ වැඩ කරන්න. Honest means, integrity means that. Objectivity means you are not biased. You are independent. Objectivity means you are independent. කාඩ කඩ යන්නේ සිංහල අපි කියන්නේ කාඩ කඩ යන්නේ. Independent. අපි ස්වාධීනයි. Third one, professional competence and due care. PC and DC. PC means professional competence. DC means due care. Means you should have competence, skill, knowledge, experience you should have. Due care means care කියන සැලකිලිමත් වෙන due care means වඩා සැලකිලිමත් වෙන්න ඕන. That is third principle. Fourth one, you have to maintain confidentiality, meaning clients' confidential information you should not disclose to a third party unless it is required by the law to do so. If there's no court order, if it is not a legal requirement, you should not disclose clients' confidential information to third party. Client's confidential information you should not disclose to third party. Professional behavior, last one, means simply, lamai child AAT institute ke goodwill එක damage කරන්න එපා. Don't bring discredit to your profession. ඒකනේ. Even your salary is much low, you wear audit trainees, they wear long sleeves, tie, they wear tie like they wear like CEOs, but their salary is very much low. When you speak to your clients, when you write emails, you have to maintain your professionalism. Meaning, you have to always remember, I'm a AAT student, so I need to protect this institute goodwill, right? This institute goodwill. That is what fundamental ethical principle says. But unfortunately, there are certain challenges for us to comply with these fundamental principles. අපිට මේවත් එක්ක comply වෙන්න හරි අමාරු කාරණා ටිකක් තියෙනවා because of these threats. ඒකයි මම මේ diagram එකේ දාලා තියෙන්නේ threats to fundamental ethical principles. So these threats are two fundamental ethical principles. මේ threats ටික තියෙන්නේ මොකටද එනවා? Fundamental ethical principles විනාශ කරන්න. නැති කරලා දාන්න. Right? මොනවද threat? Self-interest threat. Self-interest threat, it can be financial interest threat, financial or non-financial. උදාහරණයක් මම කියන්නම්. Quickly. Right? මෙන්න මේක උදාහරණයක්. Let's say you have identified a misstatement, a material misstatement relating to a revenue. What is the misstatement? Client has reported fake sales invoices. Client දාලා දිනවා fake sales invoices ටික. Fake sales invoices he has reported. ඔයා අහනවා give me invoices for these sales. Give me customer contract or customer orders to support this recorded sale. ඒවට උත්තර නැහැ client ගා. Because he has reported fake sales. Client කියනවා look here auditor, I will give you a job opportunity, right? Or I will give you 5,000 rupees or 50,000 rupees. Please ignore this. Self-interest threat will be created to integrity, and that has impact on independence as well. You are not independent, because you are biased to management if you accept. That is called self-interest threat. There are multiple examples. I believe your own lecturer has been explained all these things. Go and check your study pack. Familiar, I'm giving you the high level understanding. Familiarity threat, meaning now let's say I am auditing JMC's I am the auditor. I'm auditing JMC's financial statement for last 10 years. Now I'm like employee of the JMC. If JMC asks me to do something, look here, we will ignore this impairment. Because of the friendship, long association, I'll agree for that. I don't like to hurt JMC management because I'm working with them for last 10 years. Familiarity threat. Another example, let's say my wife is the finance manager of JMC. Now I'm going as audit manager to audit financial statements that my wife has prepared. My wife prepared a financial statement. Now I'm going to audit. Big problem. Will I disclose any misstatement that I have identified? No. Material misstatements will not be disclosed. Material misstatements disclosed karana familiarity threat. I am not independent. I am biased then. I don't maintain integrity. That's a problem. Self-review threat. Self-review threat means auditor can provide multiple services to whom? Client. Multiple services auditor can provide to client. In a client then services, bookkeeping services, audit services, review services, tax services, consultant services. Let's say you have prepared JMC's financial statement because close to the year end, finance manager of JMC has left from the organization. Organization අතහැරලා ගියා. Now JMC asks you to audit financial statements of JMC. Prepare financial statement of JMC. JMC के financial statement හදන්න කියලා කිව්වා. Because that is an emergency situation, you have prepared financial statement. දැන් ඔයා financial statement හදලා ඒවම audit කරන්න යනවා. ඔයා කරපු වැඩේම ඔයා audit කරනවා. Self review threat. Let's say you have given tax consultancy services. ඔයා tax consultancy services දීලා ඔයා tax audit කරනවා. Self review threat. While legal advice deal, they have make a provision for a liability, right? They have make a provision. Then a provision of audit karna, but you have given legal consultancy. Previous judgment ekak oya audit karanna yanawa nan self review threat will be created. Simple as that. Advocacy threat, meaning you are promoting your client. Oya kiyana JMC එක listed company nan api himamu John Keels. John Keels share price ලබන මාසෙ වැඩි වෙනවා. Share price will increase because of these reasons. You are auditor, you are promoting your client. You are acting as an advocate. Advocate කෙනෙක් විදිහට act කරනවා client. You are giving legal advice also. You are promoting client. If you are promoting client, that will create a risk. You are promote කරනවා නම් it will create a risk. ඒක අපි කියන advocacy threat. Intimidation threat. You are under pressure. There's an undue influence on it, auditors. What is the undue influence එකක්? Example. Then කියනවා CFO, you are a professional accountant. There's an idle asset, not ideal, idle asset. Asset which is not using in usable condition. You propose, dear CFO, this asset should be impaired. Because no use, no future economic benefit flow to the entity. CFO කියනවා, no, don't do it. Because if you do this, this will charge to PNL as impairment loss. If you charge it to impairment PNL, our profitability will come down. So then that has impact on our performance. අපේ performance වලට ප්‍රශ්නයක් තියෙනවා. Because of that, don't do it. Don't do it. There's a pressure to you not to follow right accounting treatment. Problem, intimidation threat. If I give another example, now let's say you have identified misstatements, you wanted to adjust, management is refusing. Management says no, it is not, it will not be adjusted. Right? If so, I will give you qualified opinion, adverse opinion, right? Right? Adverse opinion. Client කියනවා, right, you give, next year we will change the auditor. අපි auditor change කරනවා. අන්න problem එකක්, ප්‍රශ්නයක්. auditor change කරන්නයි යන්නේ. ඒින්ද auditor බය වෙලා කියනවා, no, we will do this. We will not adjust. Intimidation threat. මෙන්න මේ threats පහ has impact on what? Impact on these fundamental ethical principles. මේ fundamental ethical principles වලට මේ threats පහ impact එකක් තියෙනවා. Right? කොහොමද මේ threat එකෙන් බේරෙන්නේ? Safeguard. How do we reduce or eliminate this threat? බලන්න relationship එක. Threats, two fundamental ethical principles, safeguard, to reduce and eliminate threats. To reduce or eliminate these threats, we have safeguard. Right? Safeguard. කොහොමද මේකෙන් බේරෙන්නේ? There are lot of safeguard here, but I will not go through this in detail. I believe you have learned list of safeguards because 1 hour is almost gone behind the second question. But go through safeguard. So answer the second question. If you don't follow professional, if you don't behave ethically, there's a problem. I will share that with the answer, right? Because it's not professional. If I show you the answer here, this is the answer basically, right? Another reason why member should behave ethically, that is unethical behavior may result in disciplinary action by professional body, right? Your professional body will take disciplinary actions if you're not following. Other reason, ethical behavior includes compliance with laws and regulations of the country. So this means compliance with ethical requirement will be a legal requirement of the country. If you don't follow, it will be a violation of law. That is why it is important to behave ethically, right? That's the answer, right? Identify the need for ethical behavior. So here there's a scenario given in the question, but I recommend you to go through with the answer. It's simple question, it is not difficult. Since I have given some idea, you can answer this quickly, right? Fine. Okay. Question number 3. State why external confirmations are considered as reliable evidence. Who can answer this question? Come on. We don't have a lot of, much time. We have 1 hour time period. I will quickly summarize these things, right? So, state why external confirmations are reliable. Second, state 4 reasons external confirmation can be used. Explain 4 situations in which external confirmation can be used as audit evidence. Come on. No answers. Give me a second. I need to bring my laptop charger. Till that, you can go through this and ready. Come on. Come on, tell me. When you volunteer, why external confirmations are more reliable? No idea. Then Savitri, why external confirmations are more reliable?
Sir, because of independent documents.
Very good, very good. Yeah, so external evidence, right? So again, let me quickly explain your audit evidence. So these are the important topics. Huh? We might not be able to complete everything. No, I'm referring to the important things. Here, audit evidence chapter. You have a separate chapter called audit evidence. There, audit evidence standard explain you, right? SL is 500. Audit evidence should be sufficient and appropriate. Sufficient and appropriate. Sufficient means quantity. Appropriate means quality. Sufficient and appropriate audit evidence, right? Sufficient and appropriate. Appropriate means quality. To be qualitative, audit evidence should be relevant and reliable. Relevant and reliable. Audit evidence relevant when not only relevant for particular assertion. Reliable can to be reliable. 5 conditions should be satisfied. External evidence are more reliable than internal. So then external confirmation from external party. So it is more reliable. Answer is that it is from external party. Internal evidence are more reliable when internal controls are sound. Internal evidence can be reliable, but for us to consider it as a reliable evidence, internal control system should be sound. Internal control system. Third one, originals are more reliable than copies. Original one is more reliable. We are receiving original confirmation from external parties. Therefore, it is reliable. Direct evidence are more reliable than indirect. External confirmation you directly received from third parties, external parties. Therefore, it is reliable. Written evidence are more reliable than oral. External confirmation is a written evidence. Therefore, it is reliable. To be reliable, whatever the audit evidence to be reliable, these 5 conditions should be satisfied. So when it comes to external confirmation, it is from external party, independent, therefore it is reliable. It is original from external party, therefore it is reliable. It is directly from external party, therefore it is reliable. It is written evidence, therefore it is reliable. Audit evidence chapter basically reliable when we are satisfied. So second part of the question, state 4 situations in external confirmation can be used as audit evidence. External confirmation parties, right? Question number 4. External parties parties that you can call external confirmation. Accounts receivable, bank, accounts payable from creditors, leasing companies. From these parties, you can call external confirmation on the balances. The debtors lagging puluang, creditors lagging, bankers lagging, inventory held by third party people, lawyers on provisions for pending litigations, right? From experts on valuation, you can call external confirmations, right? Simple. So that's the answer to part of question number 3. Question number 4, corporate governance. I will leave that question, but answer is there. So it's theory part, no practicality. Therefore, you can quickly go through it. Let me jump into section B. Before I jump into audit reporting question, let me go to question number 7. Sorry, question number 7 is here. Before 7, question number 8. Sorry. Before that, there's a mandatory question in your paper. No? Question number 9. Right? Question number 9. Yeah. Question number 9B. Question number 9, part B. Question number 9, part B. Question number 9, there it has two parts. Question number 9, part B. This is important question, as I believe. Right? Make an important prashna. Before that, go to the requirement. Number 1, this is very important question because mandatory questions are there in the business paper, business process, because your subject is was process control and audit. So this question is from business processes. Mandatory question is there in your exam. So I believe this time it will be a cash management related question. The question will be from cash management process, right? That's why I included this time in this paper. This question in this model paper. State 3 objectives of internal controls that should be exercised over cash and banking cycle. 3 controls should be there in cash and banking cycle that we can answer. Let's see. 10 marks will be given for this. Identify 5 control deficiencies in the above mentioned procedure of Domex Limited and explain the potential consequences. Or explain 5 control weaknesses and the potential consequences. Mono the control weaknesses and the potential consequences. And state 1 control to address each of these deficiencies identified above. The deficiencies for 1 recommendation, 1 control you have to introduce. So that's the question. We'll go through this quickly, right? Hope you all can see this. Domex Limited is a privately owned company that operates a workshop which repairs electrical appliances such as refrigerators, washing machine, and ovens. So basically electrical appliances. All repair jobs are supported by job card and performed by qualified technicians. Qualified technicians are my job and each and every job is having job card. Fridge refrigerator not job card qualified technician is identifying the error or default. Or the fault. Customers are required to pay either by cash or checks upon collection of the repaired items. Repaired items repair you have to pay in cash or checks. Checks are accepted only from corporate customers. Checks are only from corporate customers. Corporate customers checks done. Again, companies fully. It's a JMC can company. JMC in the not made Domex Limited electrical appliance they will consider JMC as a corporate customer. Checks done. Following are cutting checks done on cash, right? The following procedures are applied to collection and banking cycle. Collection and banking cycle following procedures they have applied. After then, weaknesses Number one, the cashier collects cash and checks. Cashier collects cash and checks or cash or checks from customers when collecting the repaired items. When you handed over it to customer, repaired item, and you handed over to customer, you collect cash or checks. A system generated receipt is issued to customer at the same time. So when you accept cash or checks, you will give them what? Receipt. Second, cashier posts the receipt into the cash book at the end of each day and update the sales ledger. Sales ledger ka cash ka update karna at the end of each day. End of each day. Corporate customers post their checks under registered post covered by receptionist. Cover for registered cover, and receptionist open the email and record the checks detail in the inwards check register. Receptionist record checks in inwards check register. Checks are then handed over to the cashier. Checks handed to the cashier. Because corporate customers, they will courier, right, to the company checks. When the cashier is on leave, cash and checks are collected by any member of the finance team available, and system receipts are issued to the customer. When cashier is on leave, any member can collect the checks. Cashier has written his password in the notepad for use of finance team members only when he is on leave. Password an account assistant prepares bank reconciliation on a monthly basis and submit them for the review and review of accounts if required. Now you all can tell me key weaknesses of this process. Forget about the consequences, but tell me key weaknesses of this process. Pasindu, one weakness. So earlier the better. Volunteers, you can unmute and answer.
Anyone
When I
from
ask
the
questions, you are
finance
to me.
Password sharing one.
Good. One is password sharing is one big failure.
anyone from the finance team can issue the cash receipt?
Anyone can finance team can accept cash receipts when cashier is in leave. Second, because anyone can't do that, only dedicated person can do it. Good. What else?
So bank reconciliation compulsory, somebody authorized person need to review.
Compulsory, but they are doing on if requested.
If required.
No, if requested. Yes, it is not the case. Someone should review bank reconciliation. It's a must. If required, doesn't required.
Yeah.
Right? If bank rec, you have to review. Good. What else?
The check envelope was opened by the receptionist.
Yeah. Why it is a weakness? Good point.
He can make any fraud of that.
Because receptionist is not qualified enough to understand whether
responsible person.
Yeah, right responsible. She is not the right responsible person, and she is not competent. Receptionist in check balance the name. Yeah, in call answer, arena, meane, area, meagi, arena, hit a goal, that's all. Right? This is finance job role. So finance person should look after that. But here, receptionist is opening the checks, which is completely wrong. What else? What else? No, this is the key risk for me.
The things, receipt issue and also
Receipts?
issuing cashier leave time, responsible second person.
Yeah, that's we discuss. Anyone in finance department can't accept. Only dedicated person should accept. In dedicated person should take over the responsibilities when cashier on leave. Good point. But main weakness in this case study is what? For me, main weakness is no segregation of duties, lack of segregation of duties, because cashier is accepting cash and checks, cashier is updating cash books, cashier is updating sales book.
This is one-man show like.
One-man show, no segregation of duties. That should be the first risk that you have identified. Then, that is the answer to one part. Control deficiency we highlighted with me. And be careful, the examiner is requesting another answer. What is and? Explain their potential consequences. Password share consequences. What is the consequence? We might not be, we are not in a position to identify who has passed the entries, because password has shares. Anyone can pass the entries. That is the consequence. Now let's say bank reconciliations are not reviewing. What is the consequences? The errors in bank rec you might not be able to identify in the absence of review. That is the consequence. Right? Receptionist open checks and maintain inverse check register. There can be errors, frauds. That is the consequence. So likewise, in this answer, right? In this answer, go to question number 9, part B. You can see proper table here. Control deficiency, consequences, suggested control. Right? 3 answers are there in this Word document. Therefore, after I sharing this with JMC management, you will take this. So go through this. All the weaknesses that you have highlighted is here, right? So this time be ready for you have to give more priority for cash management related business process question. If your lecturer has given priority for some other business processes, don't underestimate that. This is my prediction. But if Nilantha has given, let's say this time it's payroll, yes, that is also important, because he is saying with the background, right? Because he is the person who has analyzed all these past papers properly. Possible, but I am expecting this question. Plus, you have to give attention to the processes that your lecturer has highlighted as important, right? Fine, done. So that is business process related question number 9, right? Quickly we have done, but I just wanted to highlight the way of identifying control weaknesses also important. These are mandatory questions. That's why I do, right? Fine. Now let me take you all to audit reporting chapter. It is not a past paper question discussion, but there's a past paper question answer also is there. But I would like to take you all through this audit reporting model quickly for your benefit, right? Quickly audit reporting chapter. Audit reporting මේ වෙනකල් තේරිලා නැත්නම් මේ වෙලාවේ හොඳටම තේරෙනවා. බය වෙන්න එපා. මේ වෙලාවේ හොඳටම තේරෙනවා. Guarantee. හරිද? මම මේ කරන්න past paper discussion එකට වඩා audit reporting chapter එක quickly ආට summarize කරලා ඔළුවේ හදන රූපයක්. ඒ රූපය හදන්න තමයි මම උත්සාහ කරන්නේ. Give your attention, 100% attention, right? Fine. Audit report. Auditor can issue. First thing is, take a note. If you are recording, that's fine. You can listen to this, watch this later, right? If not, you have to have short notes on this. Number one. What is number one? Audit report. Auditor can give two opinions. Auditor can give two opinions. One is unmodified opinion. Other one is modified opinion. Okay, now I can give an opinion. Unmodified opinion means, how do you deliver unmodified opinion? Financial statements are free from material misstatements. Right? Give me a second. 1 second. Right, sorry. Unmodified opinion. Financial statements are free from material misstatements, or financial statements are present fairly. Financial statements are present fairly. Satya sadharana present karla diyena. Or financial statements are true and fair view. True and fair view. Satya sadharana. That's how you deliver what? Unmodified opinion. Kise modification hai? Good opinion. Api eka cover karana mokenda? SLA US 700. That is the standard. If we don't have material misstatements, we deliver this opinion. But other side is little complicated. Unmodified opinion is that modified opinion covers in SLA US 705. 705. You can modify opinion because of two reasons. Auditor කෙනෙකුට audit report එක modify කරන්න පුළුවන්. Auditor can modify audit opinion in two situations. Only in two situations. One, when you have material misstatements in financial statements, whether financial statements are free from material misstatement, auditor has obtained sufficient appropriate evidence, audit evidence, to conclude that financial statements are not free from material misstatement. Financial statements වල ප්‍රමාණාත්මක සාවද්‍ය ප්‍රකාශන තියෙනවා. ඒ කියන්නේම financial statements are not compliant with accounting policy. In short, is that financial statements are not in line with accounting standard. They are non-compliant with accounting standard. Something wrong with the appropriateness. Assets are not depreciating. Some assets are not depreciating. Fixed assets are, they are not depreciating. Stocks are not valued at lower of cost or NRV. And appropriate accounting standard application is not appropriate. Selection is not appropriate. Asset depreciate penne, stocks net realizable value costing aduwage aragane, not appropriate. Anna misstatements තියෙනවා. Because misstatements කියන්නේ non-compliance with accounting standard. Here, non-compliance with accounting policy. Then method of application. The way you have applied is not right. Meaning, last year straight line method depreciation. This year reducing balance method depreciation. Next year it is again straight line method. Property plant and equipment this year cost model, next year revaluation, cost model not consist. Method of application is wrong there. Change in fair value model and cost example, change in fair value model to cost model. So those are not consist. Method of application is wrong. Not material misstatements. And adequacy of presentation and disclosures. Right? Disclosures are not enough. There are going concern problems. There are material uncertainties. MU means material uncertainties. There are material uncertainties related to going concern, but you have not disclosed. Adequate presentation disclosures are not there. So something wrong with appropriateness, something wrong with method of application, something wrong with adequacy of presentation. So if so, you identify it as non-compliance with accounting policy, then you have material misstatements. And you are modifying your opinion. That is one scenario. What is that scenario? When you have material misstatements, you modify your opinion. Other scenario is what? Scope limitation. Scope limitation means inability to collect sufficient appropriate audit evidence. Right? You don't have sufficient appropriate audit evidence. Apito audit evidence only opinion ekkada. Happy audit opinion evidence ne prashnayak. Audit evidence නැති වෙන්නේ ඇයි? ඒකත් අපි වන්න බෑ. Why we don't have audit evidence? Why we have failed to collect sufficient appropriate audit evidence? One, it is beyond the control of management. Let me explain. Fire. Because of fire, the documents are destroyed. Now when auditor is asking for sales invoices, you don't have invoices to give them. Why? Those have been destroyed. Beyond the control of management. That is one reason for us to have scope limitation. So inability to collect sufficient appropriate audit evidence. Then timing issue. Timing issue means what? Timing issue means auditor appoint after the financial year end date. Financial year end date means did not, example, right? You're auditing, let's say, Cargill's Food City, Kiel Super, or let's say, example, Audit, inventory rich companies. Those are manufacturing organizations. Their inventories are much higher. Inventory is much higher, right? Inventories are higher. Hey, 31st March stock ekata you have not participated. You have not audited 31st March stock. 31st March financial statements stock audit karne. Auditors appointed after the 31st March. There's a timing issue. Auditor appoint after the year end. Because of that, you don't have sufficient appropriate audit evidence. Scope limitation. Third one, management enforced limitation. Because of that also, you don't have sufficient appropriate audit evidence. Management enforced limitation. Because management does not allow to reach to subsidiary auditors. Let's say you're auditing consolidated financial statements. Then you wanted to reach to subsidiary auditor. But management say, no, you don't have access to subsidiary auditor because it is confidential. You wanted to call external confirmation from debtors. Management says, no, from these debtors, you can't call external confirmation. Management enforced limitations. Because of that, you might not be able to collect sufficient appropriate audit evidence. එහෙනම් කාරණා දෙකක් තියෙනවා. එකක් තමයි modified opinion දෙන්න. There are two reasons to give modified opinion. One is non-compliance with accounting standard, meaning material misstatements are there. Right? Other one is scope limitation because of these three reasons. Whatever the reason, now listen to me properly. Whatever the reason can be material. Material වෙන්න පුළුවන්. ඒ reason එක scope limitation එකක් වෙන්න පුළුවන්. Meaning you don't have sufficient appropriate audit evidence. On the other hand, it can be non-compliance with accounting policy. Both can be material. Both can be material. Whatever. Financial, both means either non-compliance with accounting standard or either scope limitation can be material. Can be material. If it is material, you give a qualified opinion. Qualified opinion. How do you deal with qualified opinion? You have to go and use your audit report or study book or your own lecturer's note. Except this matter. අපි හිතමු උදාහරණයක් විදිහට inventories are not valued lower of cost or NRV. On my example like that. Something wrong with application of accounting, sorry, appropriateness of accounting policy. Misstatement, okay? Lower of cost or NRV aragane. Prasne material. Prasne pada pramanatmaka material. Qualified opinion. Except the matter described in this basis for qualified opinion paragraph, you know that, right? Except this matter, except this inventory matter, financial statements are true and fair view. Except for opinion. Api kata karana karanama harunu kota balanced financial statements are true and fair view. Except for opinion kila api mekata kiyana. Qualified opinion kila kiyana. Except for opinion. Except this inventory matter, financial statements are present fairly. Beyond the scope limitation. Same example, in auditors are appointed after the year end. May 2nd. 2nd May, you have appointed as auditor, 2nd May. Now you are auditing manufacturing organization. Manufacturing organizations are having inventories, right? Inventory you have not audited. Why? Why you have not audited inventory? Because you have appointed after the financial year end date. Because financial year end date 31st March. Then audit kalane. Unless scope limitation. You don't have audit evidence regarding existence of inventory. Then material. Material na qualified opinion. Except that matter, financial statements are true and fair view. Except for opinion, qualified opinion. Scope limitation or non-compliance with accounting standard if material qualified opinion. If it is adverse, sorry, if it is more than materiality, material and pervasive, pramanatmaka bhavayata vada yaha giyapu impact එක. Pervasive impact. Pervasive impact එකක් තියෙනවා කියලා අඳුරගන්නේ කොහොමද? මෙන්න මේ කාරණාවලින්. Pervasive impact එකක්. Pervasive impact means not confined to one specific account balance. AB means account balance, transaction, TA transaction, presentation and disclosure. තත්ත්වය බරපතලයි. එක issue එකක් නෙමෙයි තියෙන්නේ. There are many issues. Many issues means non-compliance with account, stock LKS2, asset depreciate when inventory value karana, revenue recognition multiple many issues not confined to one transaction. එක transaction එකට ලඝු වෙලා නැහැ. Not confined to one transaction. එක transaction except that matter කියලා qualified එකක් දෙන්න පුළුවන්. දැන් qualified opinion දෙන්න බෑ because that is not confined to one specific. There are multiple issues. Sorry, many issues, not multiple, many issues. Many issues තියෙනවා නම් තත්ත්වය වරපතලයි. Material and pervasive. ඒ වෙලාව අපි දෙන්නේ මොකද? Adverse opinion එකක්. Except for opinion නෙමෙයි. තත්ත්වය බරපතලයි. අපි කියනවා කෙලින්ම financial statements are not true and fair view. Here, adverse opinion. කොහොමද deliver කරන්නේ? Financial statements are, sorry, let me. Here, because of the significance of the issue, financial statements are not true and fair view or not free from material misstatements. Adverse now. Right? Pervasive now, many issues. Maybe out at pervasive. Second scenario. Confined to specific transaction. Tani transaction tamai lamai. Become inventory. Inventories are not valued at lower of cost or NRV. Lower කරගෙන නැහැ. cost එකයි NRV එකේ අඩු එක අරගෙන නැහැ අපි. හැබැයි inventory කියන්නේ balance sheet එකේ 90% of the total asset, let's say 80% of the total asset represent inventory. ඒකනේ lower of cost or NRV අරගෙන නැහැ. ඉතින් තත්ත්වය බරපතලයි. right? තත්ත්වය බරපතලයි. Then we can't say except inventory because this misstatement represents substantial portion of the balance sheet. 80% is not the defined threshold, but 80% means substantial. Even 60% may be substantial. If it is substantial, even though it is because of one single issue, we consider it as what? Material and pervasive. Material and pervasive. Then third one, disclosure which is fundamental to financial statement. Some are disclosures which are fundamental to financial statements. Example, going concern. There are material uncertainties relating to going concern. Multiple uncertainties, right? Multiple uncertainties related to going concern, right? But problem is what? You have not disclosed in the financial statements. You have not disclosed in the financial statements. If you have not disclosed in the financial statement, right, then it is a problem. Material and pervasive, because fundamental disclosures are not there. Not except this matter, financial statements are not true and fair view. Basically, if it is material, if non-compliance with accounting standard material, qualified opinion, right? If not, meaning material and pervasive, you are giving what? Adverse opinion. If so, you are giving adverse opinion. Adverse opinion, right? Fine. Then scope limitation. If it is material, you know, right? If it is material, what it is? If it is material, qualified opinion. If it is material, qualified opinion. But if it is adverse, disclaim opinion. Scope limitation එක pervasive නම්, material and pervasive නම්, අය කතා දෙයක් නෑ. කෙලින්ම disclaimer. Disclaimer means අපි කියන්නේ financial statements are not true and fair view. අපි කියන්නේ කෙලින්ම we will not give an opinion. We will not give you an opinion. Disclaim opinion. මතයක් ප්‍රකාශ කිරීමෙන් වැළකී සිටිනවා. ඔන්න audit opinion classification එක. එහෙනම් මතක තියාගන්න modified opinion වර්ග තුනයි. එකක් adverse opinion, other one qualified opinion and disclaim opinion. Disclaim opinion දෙන්න මොන වෙලාවේද? Scope limitation එක material and pervasive වුණොත්. Adverse opinion දෙන්න මොන වෙලාවේද? Non-compliance with accounting standard when it is material and pervasive. If both are material, මේක හරි මේක හරි දෙකෙන් එකක් material අපි දෙනවා මොකද? Qualified opinion. ඔන්න standard එක. ඔච්චරයි. That is SLAS 5C705. Right? In addition to that, 701 and 706 also there. I recommend you to pay your attention to that as well. SLA 701 means key audit matter. 706 means emphasis of matter, right? I might not be able to complete everything in this seminar because, you know, this is 2-hour game. 701 key audit matter, 706 emphasis of matter. For both, you should give your attention, right? Fine. Then mama 701 ne vitara podda explain karanna, right? Key audit matter. Key audit matter කියන අපි CAM කියලා කියනවා. Key audit matter, those matters that are in auditor's judgment. Auditor හිතන විදියට professional judgment were most significant in the audit of the financial statement. Most significant in the audit of financial statement of the current period. Current period dekේ most significant matter එකක් නම් ඒක හැබැයි misstatement එකක් නෙවෙයි. Misstatement එක නම් කෙලින්ම opinion එක බලපානවා. But most significant to the current period audit. So those we identify as key audit matters. මොනවද key audit matters වෙන්නේ? Right? Here key audit matter is an improvement and transparency to audit report. It's a mandatory for PLC. CAM and PLC are mandatory. CAM does not constitute a modification. Key audit matter කියන එක modification එකක් නෙවෙයි audit report එකට. Right? මොන වෙලාවෙදි key audit matter එකක් include කරන්න. It's a separate paragraph in your audit report. Significant risk. Let's say in our previous question, cashier is managing the entire cash management process. Sales upload, bank reconciliation reviewing, collection of checks and cash, update in accounts, everything is with cashier. Significant risk. You can identify as what? Key audit matter. Significant risk that you identified. Significant judgment. estimate uncertainty in fair value. Example. Now let's say you are auditing Vogue Jewelers, right? Vogue Jewelers. What is the key balance sheet item? Inventory, gold, Rattarang. What is the value current chartered accountants, double AAT accountants? No, you can't value. You can't value. But gold. When you value gold inventory, there are a lot of assumptions behind that, right? Market price, inflation, and import duties, tax, everything is matters when you value gold. Value, right? So it's subject to material uncertainty, right? So then the assumptions that you have used in gold valuation, you have to consider as what? Key audit matter, because it involves significant judgments. It involves significant judgments. Another example, let's say you're auditing CIC company. CIC means they are in Mahara, cows, fuel pumps, trees, biological assets basically. So those valuations, valuation of livestock, valuation of cows, subject to many judgments. Those significant judgments you have to consider as what? Key audit matters. Key audit matters. Then significant event happened during the year. Significant event happened during the year. You can consider as key audit matter. Let's say if there are new acquisitions, if there are natural disasters, if there are management change. So those are significant matters. So those you can consider as key audit matters. These are the three examples or three events that you can consider as what? Key audit matters. Key audit matters. So you can use separate paragraph to address key audit matters. So that is what I wanted to cover through what? Cover through audit report, right? Remember that. So I'm not going to this particular question number 5 is from basically audit report in chapter, but this is very old question. I got it from previous syllabus, but still it's beautiful question. There's audit report. You have to identify the errors in this audit report. So you can highlight errors in this audit report. You know the audit format. You can go through it, right? In addition to that, question number 11, part C is there. So I would like to pay attention to this, right? We'll go through this. What is the question? Assess the impact of above to audit opinion. මෙන්න මේ කාරණාව audit opinion එකට බලපානද බලන්නලු. Question number 11, part C. Part C. මොකද බලන්න? You are the senior audit in charge, right? Give me a second. Right, okay, right? You are the senior, you have to answer this question, right? Therefore, be with me. You are the senior in charge of the audit of Mathara Food PLC for the year ended 31st March 2012, right? Very old question, right? But dates are not important. What is important to understand this question? The statement of financial position of the company reflect inventories that are held by third parties. Your inventories you are held by third party because of the warehouse space issue. You have outsourced your inventory warehouse. This is a significant balance, but the company has not carried out physical count for this balance. Company has not carried out physical asset verification on this balance because it is with third party. You have requested to call confirmation of these balances, but management is not agreeing with such audit procedure as they believe that it wasted of effort. Management again, no. External confirmation, third party waste of time. Management does not allow you to call external confirmation, right? Management has requested auditor to be finalized soon as possible, since it takes a long time to receive balance confirmation from third party. management එක මේ ටග්ගල් audit එක ඉවර කරන්න, we have to complete this audit fast. It will take some time to get this confirmation from third party, assess the impact on above on the audit opinion. Now your time, tell me, how do you assess this impact audit report? Come on. Kaushika, are you there? Nafia?
Sir,
Yes.
hello.
Yes, can hear.
Yeah, can I complain about this CG corporate governance?
Sorry?
Can we complain about this to the CG governance?
I can't hear you properly.
Hello.
Yes.
Yeah, we can complain about this to the CG, and also we can inquire about why they need it as soon as possible. Can you hear
Good.
me?
But the question is this: assess the impact on above issue on the audit opinion. Opinion එක බලපාන්න කොහොමද කරන්නේ? You can take multiple actions. How it impact on audit opinion? මොකද්ද වදින opinion මේකට? Because you wanted to call external confirmation from third party, inventory holder,
Yeah, we
management
can
again.
find,
No, it's a waste of time. Don't do it.
We can find alternative evidences since the management is not letting us to find external confirmation.
Yes.
We can go with the alternative evidences.
Yeah.
Yeah, we can do that.
If evidence are not available, how its impact on audit opinion?
Then we have to give an adverse opinion since the management is not letting us to find the external
Okay. It's
confirmation.
an adverse opinion according to you.
Yeah.
Good. Let's clarify. Let's give some opportunity for others, another student. Good explanation, right? But I don't know if the answer is correct or not. Let me explain. Pasindu, how will this impact on audit opinion? Ruan? Vihansa? Vihasma? දැන් මේ audit opinion කියලා දුන්නා විතරයි. Because this is important. It's a mandatory question. No auditing paper without audit reporting chapter. No paper without business process question. That's I explain you. This is the second one. No idea. Come on, guys. Shama, Samha. Samoda. Whatever language you can use, even Sinhala, English doesn't matter. No idea. Come on. I think these students are not there in this call. Sabine? Shakar?
Hello, sir.
Yes.
The inventory balance was significant,
Yeah.
and company was not taken the physical count for this balance. We can check the balance was material or pervasive, and we can give if the balance was more pervasive and unmaterial, we can give qualified opinion. Unpervasive and unmaterial. If the balance was material and pervasive, we want to go for an adverse opinion.
Okay. Now let me explain. Both answers are wrong. That's what you have to be careful. Here, I told you, audit report can be modified because of two reasons. One is because of non-compliance with accounting policy. That is this. Non-compliance with accounting policy. Right? Other one is scope limitation. First of all, you have to define, you have to identify whether there are non-compliance with accounting policy or scope limitation. Inability to collect sufficient appropriate audit evidence. What is the issue here? Problem is what? Scope limitation or non-compliance with accounting policy?
Scope limitation.
Scope limitation. Because management enforce limitation here. Management enforce limitation. Management no, you can't call external confirmation from third party. Management enforce limitation. Management enforce limitation. This is material or not? Material or not? Question itself says it is significant. It is material. Because it is material, significant, because they are not saying it is pervasive. They are significant here. So, and this is the only issue they are highlighting. We don't see many issues, right? Because of that, we can give what? Qualified opinion. Right? How do you explain this for 5 marks? There's a scope limitation because management enforced limitation to call external confirmation. Therefore, auditor doesn't have sufficient appropriate audit evidence to give proper opinion. Therefore, auditor, since matter is significant, auditor has to give what? Qualified opinion. You can add this sentence also. If the matter is pervasive, if we don't know, if the matter is pervasive, you can give what opinion? Not adverse, disclaimer opinion. That's an extra sentence. If required, you can give it. If not, doesn't matter, right? If the matter is so significant, you have to give disclaim opinion, not the adverse. Why? Adverse opinion, then when there are non-compliance with accounting standard. Here, there is no non-compliance with accounting standard. Here, you have scope limitation. That is the important part. Clear? වැඩේ පැහැදිලිද?
Yes, sir.
Nafia, පැහැදිලිද වැඩේ? Is that clear?
Yes, sir. Thank you.
Good, good, fine. Okay, that is on audit reporting chapter. I recommend you to pay extra attention to that chapter because it's a mandatory question. Now, last question. Let me take you through question number. Right. Question number 8. Question number 8. Sri Lanka framework for assurance engagement. Define assurance engagement. Identify 4 key elements of assurance engagement and list 3 components of assurance engagement risk. Right? And describe evidence gathering process of reasonable assurance. Reasonable assurance engagement differ from evidence gathering process of limited assurance. Let me quickly explain you assurance engagement also, then all these answers will be, questions will be clarified. This is also mandatory questions, in other words, right? Assurance engagement here. Assurance engagement means, right? Definition is, assurance engagement means this. Simply, you have 3 parties in any engagement, right? One is shareholder, other one is management, who is responsible to prepare financial statement. We will talk about financial statement, audit of financial statements. Other one is third party auditor, right? Why I'm explaining the history of auditing and link to assurance engagement. Why this audit is required to this world? Why this assurance is required to this world? That's what I'm explaining. Now, what is shareholders' duty? Shareholders' expectation? This framework is really important. Huh? What shareholders want? Profit. Shareholder want profit. But what managements want? Managements want salary, bonus, and other benefits. They don't want profit. Because making profit will not give them anything. Right? If you are making profit, that is good for shareholders. May kapikena objective mismatch. May objective mismatch. Shareholder want profit. You want salary, management want salary and the benefit. Objective mismatch. We identify it as what? Agency conflict. Agency conflict. Agency conflict. Right? Agency conflict. Agency conflict ke agency theory explain karane ko tokadama exam me uttare. The objective mismatch. What is the objective mismatch? Shareholder expecting profit, whereas management wants bonus and salary. When the may hinda, let's say shareholder kinawa, look here management, give me 100 million profit. 100 million profit. Why? Because management board of directors, they are the people who run the business. Shareholder, look here, I need profit, give me 100 million profit. If you give me 100 million profit, I will give you 10% bonus and 5 times, or 10% salary increments and 5 times bonus. 5 times bonus 10% salary increment 100 million profit 100 million profit 10% salary increments 5% 5 times bonus and then arrangement, but still 2 objectives. Then management 10% salary increment to earn this 10% salary increment and to earn this 5 times bonus, they will try to manipulate financials. Now let's say example, they ended up with 95 million profit, whereas their shareholder want 100 million profit. Then there's a problem. What is the problem? What is the problem? Management will not eligible to earn 10% salary increment and 5 times bonus because they actually given 95 million profit to them. Them management, no, somehow we need to show them 100 million, not the 95. Now they are starting to manipulate financial statement. They reduce provisions, they reduce depreciation, they record fake sales invoices, some expenses they don't record, some accrued expenses they don't record. Somehow they are trying to manipulate this profit and show shareholders, look here, we have achieved 100 million profit. Then management management and accounts they are the accounting experts. Shareholders, they are not expert in accounting. Depreciation, provisions, lower of cost or net realizable, revaluation, they don't know, shareholders, right? Shareholders, they don't know. That's the problem. Because of that, shareholders will invite third party. Look here, my third party auditor, my management is saying they have achieved 100 million profit. Now you are the expert to audit this financial statement. Therefore, you audit and tell me. That's the history of auditing. And audit me because of the urgency conflict. Right? There's an objective mismatch between management and the shareholders. To earn salary, to get bonus and other benefit, management can manipulate the profit. Therefore, shareholders want a third party assurance, unassurance engagement, third party assurance on the financial statement prepared by management. Assurance engagement. Technically speaking, assurance engagement is an engagement in which practitioner express a conclusion, enhance to degree of confidence of response of intended users, many intended users, not the responsible party, other than responsible party, about the subject matter against criteria. Definition make dannawani man kiyanne onne. Meka thama definition එක. Somehow I tried to link. This is the definition of that layman or the if I elaborate the definition of assurance engagement, this is the definition, right? Then examiner will ask directly, quickly, if I summarize this, 5 essential components of assurance engagement. Assurance engagement එක 5 essential components. Mata nitty-gritty sort of time we have 5 minutes, right? Quickly I will explain this because you have, assuming that you have some good knowledge on this. 5 make exam directly. What are the 5 elements? 3 parties. Parties tunak inna morning. Assurance engagement. Subject matter එකක් තියෙන්න ඕනේ. You know subject matter. Criteria තියෙන්න ඕනේ. Sufficient appropriate audit evidence තියෙන්න ඕනේ. Written evidence, written report එකක් දෙන්න ඕනේ. If you satisfy with these 5 essential elements, yes, you can provide assurance engagement. But you cannot provide sufficient if you don't have these 5 elements. May elements පහ නැත්තම් no assurance, assurance එකක් නැත, right? ඒක හොඳට බලා ගන්න. තවත් එකක් මම කියන්නේ exam එකට the difference between limited assurance and the reasonable assurance. Make a very famous, those days it was a very famous question. What is the difference between limited assurance and reasonable assurance? Limited assurance means a negative form of expression. Reasonable assurance means a positive form of expression. Reasonable assurance means a higher level assurance. Limited assurance means it's a lower level assurance, right? For limited assurance, we need less time, less cost, less staff. But for reasonable assurance, you need more time, more cost, more staff, right? In both cases, you need sufficient appropriate audit evidence, but compared to reasonable assurance, in limited assurance, the level of audit evidence requirement is little lower, right? That's why we are giving limited assurance, but reasonable assurance, not that's the high level assurance you need full detailed audit evidence. So this is that. So this can be tested. On the other hand, I will give you another hint, right? What are the services that come under assurance engagement? Mona services the assurance එකක් දෙන්න පුළුවන්. මෙන්න service ටික assurance එකක් දෙන්න පුළුවන්. General purpose financial statement audit, basically audit of financial statement. You can provide assurance. Audit එකක් කරනකොට assurance එකක් දෙන්න පුළුවන්. That is one. Second one, evaluation of internal control. For that also you can give an assurance. Because service. I'm a little bit faster here because we don't have time. Audit of IT system. IT system audit karna, yes, you can provide assurance. Special purpose financial statement audit. Let's say you are auditing financial statement specifically prepared for the banking purpose to obtain a loan. For that you can provide assurance. There's a service called sustainability, right? Sustainability again, organization with three sustainability: economic sustainability, environment sustainability, and social sustainability. Sustainability service can audit yes, you can provide assurance, right? Specifically for these 5 services, most me service mona service the assurance assurance name or explain or list down services that can provide assurance. In a me assurance assurance very service out of scope related services, meaning preparation of financial statement, you can't give assurance. Tax and consultancy services, no, you can't give assurance. Preparation of tax return, you can't give assurance. For these services, yes, you cannot provide assurance. This is a quick revision on assurance engagement. So with that, actually, we are with the time. So just I wanted to explain you the importance areas. Remember this. These are the mandatory questions in the paper. Assurance engagement, mandatory question. You have to read. I explain you then that high level. Code of ethics, mandatory question. I explain little in detail. Audit report, mandatory question in your paper. I explain that properly. Business process related question. I took one question related to cash management process. That is the highest possible question I believe in this time. That is also I take you through, but pay some attention to other areas of the business process also, right? Fine. So with that, we are done with the model paper discussion. I will share this answer, right? I will share this answer with JMC management. So you talk to JMC management and take the model answers also. You can do your homework with that. Now itself I will email it to JMC management. So with that we can conclude our free seminar session for this exam. Okay, thank you very much for being with me for last 2 hours. Thank you very much. You can take this paper answer from the management. Thank you.
Thank you very much.
Thank you, sir.
Yeah. Thank you, sir. God bless you, sir.
Thank you, sir. God bless you, sir.
Thank you.